All right, start of the London kill zone. Working on the PD arrays and stuff, but fair value gap, suspension block up here. Just rally up. Looking to enter the short. Paper trading is down for maintenance right now. Let's enter on this suspension block right there. This fair value gap entry has triggered. I'll come back to this once I finish prepping the weekly and daily chart for a quick run through. All right, weekly chart. I marked this as a suspension block because if you toggle the settlement price on and off, you'll get a volume imbalance up here or down here. So I'm being a little creative, but that would probably qualify. This wick with the settlement price on, the active week, we've come down and hit the upper quadrant level of it. With the settlement price off, that wick is larger slightly. So then we have reached down slightly below that quadrant level. February, the first week in February, we've come down to the bottom quadrant level and respected it. Both of these signs are bullish, at least for the moment, as long as it keeps being respected. Daily chart. Here's the fib on the first week of February's wick. Just barely past that lower quadrant level. Here's the November wick, right around the top quadrant level. Get rid of these. So far, we've respected the top portion of yesterday's wick. Back to the 1 minute chart, came up, got into this suspension block and wicked into its wick. If we zoom out, go back to the Asian session highs, there's this fair value gap, looking for it to be an inversion that overlaps with a larger sell side imbalance fair value gap. So far, the bodies have been very respectful of it. Five-minute chart. This is a new week opening gap, high, medium, middle, and low. We're above it. Hourly chart, you can see more of the new week opening gaps. A nice little zone without any of them. So we'll either draw back down to the ones below us or run up to this next set up here, which is looking a little more likely. Daily chart. No, 4-hour chart. Here's that other new week opening gap, the next one above us, and then a cluster above that. Looks like it'll probably take this stop unless it's going to reverse soon. We'll see if it takes out the Asian session high or if it respects the rejection block, aka wick. Up there, like it did here. All right, quick rundown of the potential Asian session trades. 6 p.m. open, breakdown, back up. You'd treat this wick as a fair value gap just for marking purposes, carry that over. This respects that. Come down again, down. Now you're into the Asian kill zone where you can start looking for some better trades. Here you get displacement up, take out that high. This is at least 10 points, so noteworthy fair value gap. Come down, respect the midpoint, or you can use this one, which is easier to see on the 15-second chart. Stays above the midpoint of that. On the 1-minute chart, the bodies respect the midpoint of the 1-minute fair value gap. Here, on the 15-second chart, this is a suspension block. And then you run up. This one would be just targeting 20 points, maybe leave the third contract as a runner, but that's it. Then if you're good, you have your trail stop there, trail stop there, you break, stop out on this candle, come down. This turns into an order block, come back up. Super aggressive entry would be on this candle. Better entry would be on this candle. Treat this wick as a fair value gap. Run that down. Another just 20 points and out, or a trail stop on the 1-minute chart, and you'd be stopped out on this green candle here. No real easy entry here. That would be super advanced. Back up to the highs. 1-minute chart, no good entry. Drop down to a 15-second chart. Here's those lows. Volume imbalance, run up, come back down. You can enter on this wick, take off. But over here, aggressive drop down, mark that as a fair value gap, or mark this as a 15-second suspension block, enter on this here, anywhere either down here at the bottom of this larger fair value gap or at the suspension block. If you mark that suspension block, you could add at the midpoint, write that down. If you're targeting this previous low, you could almost add there, but you definitely have to get out here. You wouldn't get 20 points off of this trade here. This one up here, you definitely can. Consolidation, spike up, back into this same fair value gap, drop, here's that same one on the 15-second chart, bam. Some more consolidation, meaningful pop up just outside this consolidation. Comes back down, tests the midpoint. Body's working their way higher. Wick is respecting everything down there. 15-second chart down, come back up. Bodies respect the high of this fair value gap. Aggressive, but you have multiple things in here kind of showing you confirmation over and over and over and over before it finally takes off. This order block at the bottom doesn't even get down to it. Stays out of the lower quadrant of this fair value gap from the 1-minute chart. That's it for the Asia session. Here's the dead zone between Asia and London. No clean entries on the 1-minute chart, really. It'd be some continuation trades. Guess you could take one down here, 1030. But nothing super easy. More consolidation leading up into London. And then here we get to the point where I started the video. So on the 15-second chart, a cute little fair value gap right here. Respects it, drops. So you have your high, high, higher high. Body's also making another high. One more higher high, but respects this rejection block. Bam, comes up, respects the midpoint of this fair value gap, and gone. These ones are hard to take because you have to be fast, but it's there. Here's where that 15-second entry would be. Carry this fair value gap over. And that is where the entry of this trade would be. Another quick one, and you don't quite get 20 points. Hits it around 840. Drops realistically 828. So you only get about 12 points out of that if you took it. You'd be targeting that low. You'd want to get out at the midpoint of that wick. Realistically, this one's just going to be a stop out. This entry here with that stop loss would have been stopped. This one gave you some hope, but if you didn't take an aggressive partial. It just took you out here at 3 o'clock. Good example of why it's good to be caught up on all your chart work before you put any trade on, even if it's a demo. 1 minute suspension block here, nice and large. Break up above, test it, respect it. Bullish signal, obviously. Come up, test, respect everything down here. So all of this price action is leading you to be bullish. This one will make you sweat, comes back up, breaks out these lows, respect this order block. Even this one, higher bodies, come back down again. If you're measuring wicks, it's respecting the lower quadrant of that one, I'm sure. And then off to the races. Here's one more entry. Respects that midpoint. 46. This gave you a 20-point trade with the low-hanging fruit. Get in right there without even using these entries inside. It's already popped up 20 points and then some. You definitely would have been triggered in and out for profit, and it's still going. 15-minute chart. Look for it to take this high over here. At a minimum, midpoint of that wick.